Hello, everyone. Welcome back to the Engineering Entrepreneur Podcast, episode 147, recording this on April 2nd, 2024. This is your host, Scott Tarsi, and I run CADdesignhelp.com. Go to my website, sign up on the email list, and they'll send you a free PDF of the top 4 mistakes inventors make. Check out my online course on how to become an engineering entrepreneur on the website. Send me a review on iTunes. And send me an email for any feedback, info@CADdesignhelp.com. Our guest this week is Dr. Alan Lomax. He has a Ph.D. in organizational systems psychology, has a passion for working with horses. He started Steed Talker Capital, which is a real estate investing company. All right, Alan, there's a lot more to your background, but I want to let you talk about it, so I will hand the mic over to you now.
Okay, great. Thank you, Scott, for having me on the show today. So just a little bit of background about me. I have not been an entrepreneur per se, but I have been an entrepreneur in the fact that I have done a lot of organizational change and done it with a great deal of passion in higher education for over 30 years. And while pursuing my passion in higher education, I knew that that's what I wanted to do, what I loved to do, but I also was aware of the fact that certainly it is not one of the highest paid professions out there, and that if I was going to develop wealth, I needed to have another avenue to do that. And so about 25 years ago, I actually began to look into real estate investing, and like many people, I started in the single family sector and did some fix and flips, and also did some flips or fixes and holds for rental income. I then got into a small mobile home park and also did some spec home building. Well, after a few years, I began to realize that though this was beginning to develop some wealth, it was a very slow and long, arduous journey, and that with each unit or each property I added to it, it was adding to my workload rather than reducing my workload. And it was taking me away from my passion of working with students and working with organizations in higher education. And so I realized that if I were really going to scale my wealth building processes, that I had to find another way to go about that. And so I found multifamily investing through syndications, and we can go a little bit more into that story. But
yeah, what is that? What does that mean? Syndication.
Syndication, yeah, that's a scary word for a lot of people, so thanks for asking about that. We hear the word syndication and we often think of mafia, but in fact, all syndication is a group of people coming together to pool their resources to fulfill a common goal. And in the case of real estate investing, a syndication is a group of people who come together to invest in properties that we as individuals couldn't afford to do on an individual basis. And what we primarily do with the teams and organizations I work with, our primary focus is multifamily, although we do self-storage and other industrial things as well. But the primary focus has always been multifamily.
So how would you recommend somebody, like, let's say somebody doesn't have a lot of capital, how can they get involved in this?
Well, that's an excellent question as well. And it probably doesn't take anywhere near as much capital as what most people think that it does. It does take some capital, but most people have more of that than what they think. There are a lot of ways to do that. First of all, people often have IRAs or 401ks, and surprising to most people, they can utilize those as a source to invest in real estate without cashing those in or without borrowing against them. you can do what is called a self-directed IRA or a self-directed 401k and roll whatever funds you have into those just like you would into another alternative IRA or 401k, and you can utilize those funds. Many people have.
Hold on. Let me talk. So if I have a 401k now, and this is for an investment property, I can use that to pay the down payment on the mortgage.
You can if it's from a former employee. If you're employed and the 401k is with your current employer, it's possible that they would allow you to roll that over, but most likely they would not. But if you have left that job and the 401k is really now in your control, you can certainly roll that 401k into a self-directed IRA. And
so you can't pay directly. You have to make it into another thing, and then that thing, which is a self-directed IRA, that can pay the down payment and the mortgage payments.
Yes, when we're talking about retirement accounts, yes, that's the way it has to be done. It has to be done through a self-directed account. I mean, you can cash in your 401ks and IRAs, but I certainly don't recommend that because there's always penalties that go with that.
Right. So there's no penalties if you transfer it to a self-directed 401k and then use that to pay the mortgage.
Correct. There's no penalties if you roll that over into self-directed account. That's
interesting because that's a way to basically cash out without a penalty. Because what you can do is you can save $200,000. You can go buy, you move the 401k, to self-directed 401k, then use that one to pay the mortgage, buy the house, and then you can sell the house and take cash. I mean, there's no penalty on all this. Now, you will pay taxes on any capital gains, I guess, but you won't pay any penalty.
Well, yes, but I mean, but the funds from the sale of that property still remains within that IRA or that 401k. It's not like, I mean, if you took the funds out of that, then that's like taking the funds out of the account, even if you hadn't invested in that.
Oh, I see. Okay, so you still have to wait till you're 65 to do that.
Yeah, you still have to wait till you're 65 to actually draw those funds out.
Okay, I get it.
Okay. So yeah, it's a great way to invest in real estate. It's a great way to invest in syndications. There's certainly other ways that you can go about that. You can, if you have a savings account, certainly you can save the money to invest. Life insurance policies oftentimes have ways and means to borrow against those. If you have an inheritance, that's another way. Of course, a good way to do it is to take out a home equity line of credit. That's actually the way I began investing in syndications. And so there's multiple ways to do that, and many people have a whole lot more resources to actually invest in syndications than what they might originally think.
Can you explain more what the syndication? I'm still confused what the syndication is. Is it like an apartment, a duplex? Like, it's not a single family home.
I mean, you can do a syndication to invest in anything, but what we invest in are apartment complexes, and our target is anywhere from 50 to 150 unit complexes. We do have some outside of those ranges, but that's our particular target. And of course, the reason we syndicate is because none of us individually would be able to purchase.
Right. It's like you're owning a share of like a company, it's like similar to stock investing, where you're all some equity owner in this property.
Yes, you are an equity owner in it. You're an equity owner in that actual apartment complex. So you have all of the benefits that go with real estate investing. You have the income from the rental. You have the depreciation for your excellent tax write-offs, and you have the appreciation and the ability to leverage that as well. So it's really the ideal investment. It being a tangible asset, it isn't subjected to the fluctuations of the stock market, and the returns on investment are far exceed what you would could ever expect in certainly an index in the stock market, which is where most retirement accounts are invested in.
I'm surprised to hear that because most people say the stock market is going to provide about 7%.
Mm-hmm.
So you're saying this is going to do even better than that?
Yes, the teams that we have invested with over the last 7 years have averaged an annual rate of return of about 32%. So it is significantly greater than the stock market. Also, the Federal Reserve Bank of San Francisco recently did a 150-year review of all different asset classes. And what they discovered from that 150-year review is that real estate investing outperformed all other asset classes over that 150-year period. And so we know it's a stable, a secure investment, and one of the best places I know of to actually develop a passive stream of income while you're focusing upon your passion. And your audience are certainly passionate about their engineering entrepreneurial callings, and so they can do both. They don't have to sacrifice one or the other.
So where would somebody find a syndicate? Because that does seem like it's too much capital for certainly me, but I could definitely see myself being a part of that. So where would I find a group?
Well, that is an excellent question, and like this, unlike the stock market, which is publicly traded, and so you can just go out and you can find stocks to buy and purchase. Real estate are private equity offerings, and so they're not out there on the public market, and so you have to really know the operators in order to find the operators to deal with. And so certainly that's what we do at Steed Talker Capital, and that's really our full-time job, is to find the syndicators and to know the syndicators, and that's the only people that we and our investor partners invest with are those whom we know, like, and trust, and whom we have seen their track records over the years. If you want to do it on your own, it's actually another job. You can do it through networking. You can join your local real estate investor associations. You can go to different conferences and start your own networking processes. But as you can see, that's also a very time-consuming effort to do. So the best way is to find someone like Steed Talker Capital and associate with them and invest through our group.
So how does that work? Do you guys just charge like a fee, or is it they get paid percentage, or how does it work?
We do not charge a fee, in the sense that if you went to a financial advisor, you would pay a fee directly out to them. There are fees that are associated with the capital raise portion of that, in terms of when we go to closing on a property. There are the capital raise fees that actually come out of that, but they're not coming out of your share of that, because when we go full cycle with a property, which is either about 3 to 5 years, you get 100% of your investment back, plus all of the returns that come on top of that. So it is. So the fees actually come out of the closing costs and out of the rents rather than out of your particular investment. Does that make sense?
Okay. Yeah. So I guess how does somebody get started with your company then to do this?
You just contact us, and there is a link on our site where you can just set up a conference call, a 15-minute conference call, and that starts the conversation. It certainly is not where you're going to put your money down, but it starts the conversation. You get into our enlightened investor circle, and when we have opportunities available, then we notify everybody in our circle of those opportunities. We always start off every fundraising or capital raising process with a webinar about the specific property that we're investing in. We'll take you through the complete underwriting process. We'll take you through the operating agreement and what it is that we are going to do to increase the value on the property, to increase the returns for our investors. We'll take you through that whole entire package in that introductory webinar. And then following that, all of those of you who are interested in investing in that particular property will have a conference with you on an individual basis and take you through the details of the package. And then if you're interested in investing with us, then you sign the subscription agreement and deposit the money on that particular project. So it is, a lot of people think it's a really complicated process. It really, truly isn't complicated. We make it a passive experience, and we provide continuous feedback to our investors throughout the entire process so that they know the progress that is being made, and they know if the projections we put out there are not being made. We explain why and how it is that we're going to make up on that. We want more than anything else for all of our investors to have peace of mind and know that their capital is being preserved and know that they are going to get the returns that have been projected. So any questions on that, Scott? Or?
Yeah, so if I wanted to do this, first, like I have a 401k with a good amount of money in it, so you guys would help me move that to a self-directed 401k, and then, or tell me how to do that, and then I could, then I would basically use that money to pay to do the investment with you guys, right?
Absolutely, yes, and we'll lay out that whole process of rolling over your 401k into a self-directed account, which is really quite simple. We work with a number of different custodians, and that's what you have to do, is to find a custodian, roll it over, and then it's in your control, and you can do what you want with it. So yes, that would be our first step, would be to help you through that process of rolling that 401k over into a self-directed account.
Okay, very cool. Well, I'm going to close wrapping up. I guess, do you have any other comments about this?
Well, it's just, from my experiences, I mean, whether you're working for a W-2 or whether you are an entrepreneur out there on your own, the reality of it is that we're all investing our time and our services in exchange for money. And that creates a chronic low-level anxiety, because whether it's the employer who could yank the carpet out from under us, or whether we have some kind of accident or illness that prevents us from going to work as an entrepreneur. All of those things can happen at any time. And so we carry around this low-level anxiety. The way I dealt with that was to develop a passive stream of income that if any of those things ever did happen to me, which they actually did in 2008, when there were cutbacks all over the place, I did lose my job. And it was real estate that carried me through that. So a passive stream of income eliminates that low-level anxiety that we all carry around, whether we are consciously aware of it or not. But my desire went really further than that. I didn't just want a stream of income that could replace my income. I really wanted to develop wealth. And I, at the same time, wanted to be able to be involved in the work of my calling. And so I chose the passive route of investing in syndication rather than doing single-family homes that were burning up my time and taking away all of my leisure time. So
I own two properties, investment properties, but they are both single-family homes. But I have a rental company that does the management, so it's very passive because I just pay them 10% to handle it.
Right. Yeah, I did that too. But as you increase those units, you increase the headaches. And I mean, just think about it. If you've got two properties, so you've got two roofs, two foundations, two HVA systems, all of that begins to add up, and the more units you add, even if you've got a property manager looking out after those headaches still continue to multiply. And that's what I discovered from my own experiences. And that's why I went into to syndication and into to passive real estate investing. So if you've got two homes already, you've got a 401k, you've got plenty of resources there to actually convert that into going full-time passively.
What's the advantage of the syndicate over the homes? Because those have air conditioning units, they're going to have just as many potential things to repair. So what's the difference?
Well, the difference is that you're not the one overlooking the operations of that. And like you're doing now, you have to oversee the property managers. Well, when you're a passive investor, there are actually two components to the syndication. There are the active investors who are sourcing the material, or who are sourcing the properties, doing the underwriting, doing the due diligence on that, setting up the management teams and overseeing all of those operations. And then the other side of that are the passive investors who, rather than giving their time, effort, and energy into the project, they're putting their capital into that and letting the active investors take care of all of the management headaches, so that you as an engineering entrepreneur can focus your attention on developing your entrepreneurial endeavors and looking to develop your engineering inventions and so on and so forth. So I'm not saying it's bad. I was in the single family end of it for about 7 or 8 years before I finally realized that just was not going to be the avenue. It just wasn't scalable to the degree that I could find through real estate investing and the syndication level.
Gotcha. Last two questions real quick before we wrap up. What's your number one tip?
My number one tip is to find a place that's a quiet place and find peace of mind and a contemplative, quiet place to do that each and every day, to allow yourself to really let those ideas that you as an entrepreneur and an engineer have to let them come to the surface. And it's those bright ideas that we find in those quiet moments that are really priceless. There's a lot of people that think that in order to invent and design, that you have to put yourself under a lot of pressure to do that, and that's where the ideas come from. That just really isn't the case. They come from those quiet times. And the second piece of advice is to contact steedtalker.com, set up a consultation with us.
Yep.
And
yeah. What's your contact info? That's my last question. What's the best way for people to come?
The best way to go is to steedtalker.com. That's my company and my website.
Can you spell that out? So
you bet.
Know what it is.
So Steed is like the horse, STEED, and Talker, like I'm doing now, TALKER.com. That's steedtalker.com. And there you can schedule a 15-minute consultation, and no pressure, no sales. We just want to get to know you.
Very cool. I might do that because that sounds pretty interesting to me. All right. Well, thanks so much for your time. We got to get wrapping up, and we'll catch everyone next time on the podcast.
Thank you so much, Scott.